Xiaomi Corporation, an investment holding company, provides hardware, software, and internet services in mainland China, India, Europe, and internationally. It operates through smartphones, Internet of Things and lifestyle products, internet services, and other segments. Measured in Hong Kong dollars, it trades at about $11 per share. This year's high was about $19 a share. Its market cap is Hong Kong dollars 269 billion. The company has its headquarters in Beijing, the People's Republic of China, and was founded by Li Jun, a current multi-billionaire, and 6 senior partners in 2010. Li developed both Kingsoft and Joyo.com, which he sold to Amazon in 2004 for $75 million. By 2014, Xiaomi held the most significant smartphone market share in China. Xiaomi introduced its first smartphone in August 2011. The business started selling its goods solely online, but eventually developed physical locations. It was creating a variety of consumer gadgets by 2015. The business sold 146 million devices in 2020. Its MIUI operating system has more than 500 million users who log on every month. Xiaomi outpaced Apple Inc. in the second quarter of 2021 to take second place in global smartphone sales with a 17% market share. Using the Internet of Things and Xiaomi smart home technology, Xiaomi is now a major producer of products including TVs, unmanned aerial vehicles, and air purifiers. Xiaomi revealed its third quarter 2022 revenue as follows: $9.8 billion, a 9.7% drop compared to 2021 revenue. From a quarterly view, it remained virtually unchanged. 3 key business segments were responsible for the revenue drop. The smartphone market has the most significant revenue drop among the 3 categories, an 11% year-over-year decrease. Despite its decline in revenue, the company still holds its position as the 3rd largest smartphone brand in terms of global market share and is 2nd after Samsung in the Android market. Additionally, the smartphone company had a 25% growth in investment and a sizable increase in consumers this quarter, according to the Xiaomi third quarter 2022 financial data. Users of the MIUI software increased by 16% this year. However, only 25% of them are from China. Xiaomi highlights global macroeconomic challenges for the large smartphone market. Year on year, we're talking about a 7.8% annual decline in shipping and an 11% decline in revenue, 50% of which came from foreign markets. The brand's lack of dominance in many markets is also noted in Xiaomi's third quarter 2022 financial report. To establish whether Xiaomi is a good deal compared to others in its industry, we look at its price-to-earnings ratio, PE. Essentially, the PE ratio measures the price investors are ready to pay for every dollar of yearly profits. In the case of Xiaomi, the current PE is 134, far higher than the industry price-to-earnings ratio of 100. In other words, Xiaomi stocks are currently overpriced and likely to see more moves to the downside. Xiaomi has a price-to-sales ratio of 0.81 and a price-to-cash flow of 33 times. From the price-to-sales ratio, we can see that Xiaomi stocks are overvalued relative to the industry price-to-sales ratio of 0.65. The earnings per share of Xiaomi is currently 7 cents in Hong Kong dollars, which has been dropping since the fourth quarter of 2021. Specifically, stocks with EPS growth rates of at least 25% compared with year-ago levels suggest a company has products or services in strong demand. Both domestically and internationally, the smartphone sector is still experiencing many challenges. The continued COVID-19 mobility limitations and the challenging economic climate have caused slow smartphone sales in Xiaomi's home market, China, during 2022. Adjusted profit dropped by 52% from 5.2 billion to 2.1 billion Chinese yuan. Also, The company's latest net income for the third quarter is less than half of the 5.1 billion yuan it realized in third quarter 2021. Xiaomi has a return on assets of 0.64. It isn't very impressive regarding returns relative to the industry average of 1.79%. Looking at the current beta for Xiaomi stocks, we see a beta value of 1.28. When it comes to beta, everything above 1 indicates high returns but with greater risk. Anything below 1 is low and offers lower risk. At the time of this recording, Xiaomi stocks are trading at about $11 Hong Kong per share in a strong downtrend. The market is trading just below the 200 SMA moving average and broke out of the 100 SMA moving average after a rebound from the 8.5 Hong Kong dollars support. Analysts believe that if it holds the 2-year strong support zone, the next target for the short term is Hong Kong $14. If not, it may well indicate a bearish trend. The COVID restrictions in China have been a significant impact on the declining performance of Xiaomi. We expect the company's shares to perform better in the future once China is no longer locked down in the pandemic. Keep in mind, we're here to review the financials, not to provide advice on buying or selling these shares. Any investment decisions are yours alone and should be made after careful research into the company. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.